good morning, everybody.
Good morning.
Welcome to another 30 minutes with a today we've got an economics and a financial markets expert and star, Professor Hannah Scobie. Professor Scobie is an expert in many aspects, or dare I say all aspects, Hannah, of financial markets. And today she's chairman of the European Economics and Financial Centre, and unless I'm mistaken, you're professor of economics at London University as well, when you've got a spare moment. Basically, we've asked Professor Scobie to give us a bit of a brief and an unbiased view on the impact of Brexit on the UK financial sector, and a broader view of the UK economy or the trade economy. So we only have 30 minutes. So Hannah, Professor Scobie, the floor, or should I say the screen, is yours.
Thank you very much. And I would like to thank the Chamber for inviting me. And it has been a pleasure to have interactions with the Chamber over the years, and you're certainly doing great work, and I would be very happy to be of help whenever I can. I would also like to share a story that I know about a lawyer who went to give a talk in New York. And when he went to give his talk, he noticed there was only one person in the audience. And he thought, well, I might as well give my talk. And after he finished, he started wrapping up and put his papers in his briefcase and head for the door. And that one person said, "Excuse me, where do you think you're going?" He said, "Well, I thought I would just go back to my office." He said, "No, you're not." He said, "Why?" He said, "Because I'm the next speaker." So it is my great pleasure that all of you are here, and at this early morning time, you could spare the time. So let me just briefly explain that this talk comprises two sections. One is the impact on the financial market in the city, impact of Brexit, and the other part is the impact on the real sector. Of course, the subject is really vast, and the consequences of Brexit on the UK economy is a changing picture. By which I mean every day we hear of new developments, new impacts of the actual emergence of problems that are occurring in different parts of the UK economy. And the most recent one is the impact on the aviation industry. Some of you may have watched the real problems we've had at various airports in the UK. And the main reason is that the airlines and the airports cannot hire staff that were previously freely available from Europe. Unfortunately, the government is not willing to help and give visas that are easily handled and with speed. So let me start by the impact on the financial market. As you are all aware, the Trade and Cooperation Agreement, TCA, was actually signed after the election in 2019 and verified in the following January. And side by side it, there was a joint declaration of financial services regulation cooperation that basically was confirmed by the UK and the EU that they will provide a memorandum of agreement to on the sort of cooperation on regulatory matters. This memorandum of agreement was further revised by the European Commission and the UK Treasury, and it was elaborated, but as of yesterday, it was still not signed. So we don't know when it will be signed. But I had confirmation that it's still outstanding. So without a doubt, Brexit has had adverse effect on the UK financial services, and there has been a declining pattern emerging in various activities in the City of London and across the UK in financial area. So why has this happened? There are three factors. One is basically absence of equivalence and limited provision for it. The other is rules that basically were under the umbrella of MiFID II, and that's not working at the moment for the UK. And the other one was the loss of passporting rights. So these three, equivalence, MiFID II, and passporting rights are the main impediments, slowing down the work in the financial market. Now, as far as the individual aspects of these three factors, passporting rights is something that would have allowed the UK financial sector to do business with the EU, and that's actually lost. And what we are finding is that so far, more than 440 firms in banking and finance have moved or are moving their business and their staff into the basically EU. So and so they could either be moving all of their business or part of their business, or their assets, or their staff. So as far as business, their business is concerned, a lot of the firms declared their intention that they would be moving their business to the EU. And that comprised about 44% of large firms, meaning they would move part of their business to the EU. And this was a substantial rise from something like 24% in 2017. As far as assets is concerned, 1.3 trillion of assets has been declared to be moving across to the EU. And for instance, the banks have moved 900 billion in terms of assets to the EU, and fund management firms and insurance assets have amounted to about 100 billion. And then there were other categories that made a total of 1.3 billion. In terms of staff, we have something like 7,000 individuals from the financial sector have been moved to the EU. But the key factor is now not the numbers, which are less than previously thought. The jobs are actually created locally in Dublin, in Paris, in Amsterdam, and various financial centers. So that is a worrying factor, because these jobs could have been created in the UK. So, however, when you look across the EU, no financial center has dominated in terms of receiving all the migration of business staff and assets. So what we find is that if we examine these changes, the UK has various alternative trading venues such as Instanet, Block Match, Equidoc, and UBS MTF. All of these have been adversely affected. And on the other hand, Amsterdam has gained in terms of equities, equity trading, and their volume when the transition was over from 2021 basically quadrupled. And that was a visible factor, and that continued to beginning of 2022. And I should say at this point that the data on the financial market is rather sort of fragmented, and some, as far as we could get, the latest reliable data was in 2021, and we tried to update it as much as we could. As far as ICE, the International Exchange, is concerned, is transferred its carbon-related activity to the Netherlands and became the Center for Sustainable Finance. The UK's biggest market for exporting UK financial services became the US, and instead of the EU. So the US captured 35% of UK export of financial services versus the EU, amounting to 31.5% of UK export. So that shows that, in fact, now US is the biggest market for the UK. In the area of swaps, excuse me, the UK and the EU have equivalence arrangements with the US facilities called Swap Execution Facility, SEF. And this has contributed to changing some of the swaps activities to the US. What is important is that there are three types of denominations of swaps. You can have euro denominated swaps, pound, GBP swaps, and US dollar swaps. And in some cases, something like 75% of the swaps have been migrated out of the UK. So I think it's very important to note that in the area of swap execution facility, we've had, Brexit has now moved some of the swap business to US, amounting to 1.3 trillion of euro and GBP interest rate swaps, 160 billion of euro tracks, and 46 trillion of SBS and FRA onto US-based swap execution facilities. And these are quite sizable numbers to note. As far as, these acronyms, SPS is sales per share, which is a financial ratio, and FRA is forward rate agreements. And I always try and give explanation of the acronyms. Now, in terms of exports of financial services, there's explicitly charged financial services, which are important to note. And there have been a lot of exports to the Netherlands and overall to EU and US. Now, let me move to the impact of Brexit on the real economy. I think it's very important to highlight a development in the official statistics, UK ONS data. In January 2022, they decided to change the way the data for imports and exports from the UK into the EU was gathered and constructed. And that makes comparison between current data with the pre-pandemic data and pre-Brexit data very difficult, because the whole methodology has changed. And I don't really know why they have changed it, but I have my reasons to believe. So one of the important developments post-Brexit and impact on the UK economy is the visible unfilled vacancies, be it in the national health sector, be it in different parts of the economy, in the airlines, in basically truck driving, and in February, that's the data we have at the moment, we have 1.28 million vacancies, and that's a sizable number, and they're still sort of trying to recruit. And what is very important is that unfilled vacancies has a deflationary impact on the economy. It pushes up wages and in turn leads to inflation, and which we in economics call it the second round effect. So having these vacancies is not something to be cheered at, because in many circles they actually interpret it as, oh, the UK economy is doing so well, we have all these vacancies. We actually regard it as having a dampening effect. Now, as far as trade is concerned, the British Chamber of Commerce did a survey recently of 1,000 firms that showed 71% of exporters feel the UK agreement with the EU does not help them. British Chamber of Commerce did a survey of 1,000 firms, and they found that 71% of the firms who were previously exporting to the EU are finding it very difficult. And they have confirmed that the Trade and Cooperation Agreement, the TCA, is not helping them. There were 8% of the respondents who said they have increased their exports to non-EU countries. And the question is, what was stopping them while we were in the EU to expand their market outside? Because EU wasn't stopping them. So anyway, they are finding it very difficult. The customs declaration form, the actual chores that they have to follow is very taxing. Another development is that in that survey, it showed the small and medium-sized enterprises are the ones that are particularly suffering, while the large firms have been able to try and overcome the complications. The SMEs have suffered the most, and they don't have the extra staff to deal with these customs declaration form, etc. So to conclude, I would say that with regards to moves of
part of the UK business to the EU, so far the highest migration of financial sector business has been to Ireland. 135 firms amounting to 25% of all the migration have selected Dublin as their EU base for business following the exit from the European Union. This is followed by the French capital. Paris has got 102 firms have in the financial market have moved their basically staff there. Luxembourg has attracted only 93 firms, and Frankfurt has attracted 62 firms, and Amsterdam 48 firms. And the market expectation for the long term is that Frankfurt will have the highest volume of assets. Paris will have the capital, the highest number of jobs from London. And the transition to new arrangements between UK and EU will put further downward pressure to the recovery of the financial market. I think we will see a lot more effects coming to the fore in the future, and we will see this drip feed of business activities from the UK into the EU. And basically, I would say we hope that in this situation, the chamber does well, but although the city has had some adverse effect, it's still a very large financial center, and it hasn't actually lost or will lose its dominance into the European market, because the other centers are still substantially smaller. And I'll stop here.
So on that rosy note, Professor Scobie, you know, we obviously at the Chamber, which you know, is 150 years next year, we've been through ups and downs between the UK and particularly France. I mean, clearly there isn't a silver bullet to this, but I mean, something needs to be done to turn this situation around. What's your sort of take on that? What's your view?
Well, I think that we are in a situation that I mean, one area that the city is unlikely to be very open to is kind of regulations being imposed on it. And in many ways, in the past, I mean, historically, one of the main attraction of the financial market was that it relaxed a lot of the regulations. And that could be one area that could attract more business into the UK, because following the financial crisis, there has been a huge amount of regulation and compliance going overboard everywhere. And in some ways, the city could try to bring that relaxation. I could just see that being more attractive for them. On the other hand, I think there is a resilience, and I know that various people are looking to Latin America. I mean, we're working with clients who have expanded massively into Latin America. And there could be a survival in that sense for the UK financial market.
Okay, thanks. I don't know if anybody I've got a couple of questions that there's Chiryugov, Someone asked about what was your take on, have you seen any impact from the sanctions on Russia, and on what's your feeling about that, on the impact on the overall economy?
Yes, well, obviously, there are inevitable effects of the sanctions and the whole war. I mean, one factor that I should really highlight is the way the oil market operates. The oil market is very much run by the oligopoly of the sort of maybe a handful of companies and traders that can move the market up or down. If you remember, in April 2020, the price of oil became negative. That price of oil was not accidentally becoming negative. Yes, we had lockdown, but there was still as much haulage demand. And what happened was that a group of traders got together and forced through thousands and thousands of sell contracts to kind of push the price to negative, because they were benefiting from this transaction. And then they got caught, and there was a trial in Chicago of these 6 traders that showed that it was all a collusion, try to force the price of oil through fake sell contracts. Equally, from the summer of 2021, you found actually price of oil going up. Demand hasn't gone up that much relative to pre-pandemic. So what you find is that there is a continual operation of traders pushing the price up, pushing the price down. And at the moment is artificially pushed up. And then companies take advantage of it, countries take advantage of it, and of course the Ukraine war exacerbated it. But the market works on the basis of expectation, and expectation that doesn't match the reality of demand and supply. I mean, huge amount of oil came into the UK and gas, liquid LNG, and that pushed the price down, but it was for next day price and it didn't affect the supply. So there is a lot of irregularity in this market. But I think the Ukraine war, Russian invasion of Ukraine, of course, has tremendous effect on overall sort of behavior of the world market and grain market, as well as costs on the budget of the different countries.
Okay. Catherine, I don't know, there's another question about, we've been talking about the impact on the UK. What's your feeling about trade from the EU into the UK?
Well, so far, the UK has imposed no restrictions on goods coming into the UK. So what, on the other hand, is happening is that firms in EU shy away from doing business with the UK. One, even though there isn't any restriction, in anticipation that there may come restriction, they are actually reluctant to do business. So it requires a lot of education of the firms that so far you can actually sell your goods to the UK. But in terms of exports from the UK into the EU, that is where the difficulty is. As I explained yesterday, we are in touch with firms that say, if I order the product from South America, it takes a week to get to Europe, to whatever destination is going. If they order it from UK, it takes 3 or 4 months. And this is no exaggeration because the paperwork is so huge. The other thing is that even companies like Amazon, if you order a product from Italy to come to London or to anywhere in the UK, they refund you and say, no, we're not going to deliver, even though there are no restrictions. So there are a lot of irregularities in the market due to lack of knowledge. But I think UK wants to, at the moment, they have every intention of extending this period of no restrictions for goods coming into the UK to 2025. That's the kind of latest data we have.
Okay, that's very interesting. Thanks. Thanks a lot.